Hello, this is the Chart Profit video, less than an hour into the trading day, 18th of May. This from the pre-open. We're looking at the E-mini S&P. I said Wednesday 9th of May, pre-open, that time printed above 2672 would be a positive. That's because 2672 on the E-mini is the 12-month controlling price. So we have that positive. We've got here 7 value areas you can see printed above that level. And the buyers have been active here. This is the green at top markings here. So I'm taking this as a reasonably positive indication of strength that we've held above that controlling price, and we have seen some buying. Would want to see the E-mini breaking higher, at least printing some time up around 2746, and that's because 2746 is the 7-month value area high. I showed a graphic a couple of weeks ago which showed that longer term distribution, and if you remember, we talked about the value area low of that distribution at 25.95, and that's the level that was tested and rejected that led to this rally, tested and rejected on the 3rd of May. So we've gone from the value area low, which was down here somewhere, rallied back above the controlling price, and now up to this dashed line at the top, which is a value area high. But price acceptance in that area would be a positive sign. What we don't really want to see is a test into it and then a rejection. But in any case, time being printed above this controlling price here at 2672 is a positive. If we see time being spent back below that, I would take that as a negative. We have that marked at the first level support. Second level support is the more minor controlling price down here at 2647, which is the 4-month, and time printed below that level would be an indication that all is not well. If we just look here on the pulse chart, I've marked or translated the aggressive buying, the green, onto these bars here on the spider, and you can see there's 5 recent instances of that aggressive buying. Here was that test day below the value area low on the E-mini, and you can see that underneath here the pulse chart has improved. We've got green for the daily breadth, and we have now a daily momentum which is above 0 and rising. And since we've had that test, you can see the buying that's come in from there has been effective because the market's come higher. We don't see any selling so far. This looks like pretty good setup. We just don't want to see too much time spent stalling here around that value area high. So this is the current spider chart. Here's the 9-month controlling price down here at 266. Let's just look at the halfway from that high to this low, which is this dotted line here, and we appear to have consolidation above that. And if we see a breakout higher, we've had a higher low. So all of this looks pretty positive. We've seen the Russell 2000 ETF IWM breaking out to a new high. Let's just look at the daily for the E-mini S&P June contract. Here's the 12-month. We've been talking about 2672, and the equivalent halfway on this contract comes in here, this dotted line. There's that little consolidation above it. First indication that things are going wrong in the short term. This is just above 2700. Be a break of this week's low, which is that halfway point, and then things look more negative if we see price below the 12 months. So I'm emphasizing where this goes wrong, but currently it doesn't look too bad. And the E-mini, from being, or rather the spider, the S&P, from being recently a lagging index, has moved into confirming position of strength. Just want to see, make sure that it holds these levels. We'll have a look at the sentiment indicators. I'd say pretty neutral at the moment. We're seeing my version of the Rinex assets ratio here sitting pretty much in the middle of this range from where the market topped over here down to this low. Historically, the ratio is still extremely high. As I've just said, we're sitting in the middle of the range going back to the start of this year. Public poll from AAII. It's a slight increase in bullish sentiment this week, not a great deal. Bears were lower at 20.6 from 25.5. Most significant thing that happened on this chart was 5 weeks ago, kind of over here, which is where the net figure, the bulls minus the bears, down here reached a 2-year low at a negative 16.7. If we look at the Investors Intelligence poll, the newsletter writers, again bulls were slightly higher this week, bears slightly lower. You can see that the net, the bulls minus the bears, which is this histogram here, reached multi-month low, as did the 4-week moving average of that net figure, which is the black line. 1 week ago that reached its lowest level since November 2016. Only other thing to mention here is if we look at the Lipper US fund flows data, as you know I follow the 4-week flow number, I call it the black line here, which is pretty neutral at the moment. But we did see a net inflow this week, the week to May the 16th, at $10.1 billion net inflow, which is a reasonable inflow. But I look at the 4-week the 4-week sum of that flow data, and as I say, that's the black line, that's in reasonably neutral territory there. Print. Recently confirmed that the major controlling price on this level had moved to 121, or had confirmed that that was the important level about this point in April. Price below that major is all in the long-term weaker price location or weak price location. Subsequent to that, we saw a dip below the halfway point of this low, as it was at the time, and then 2 little tests back up into it, and we've seen that decline as a weak pattern. Chart has some work to do to get back into a position of strength. One thing it could do is print some time back at 118.50 here. That would most likely move that major back down to that level, and we could key off there, but right now really weak price location. This is GLD, the gold ETF, the major on this chart at 121 here. I think for an investor that's the level to watch. Price above that in the really long term, so all of this looked really healthy and an indication of strength. We saw a 4-month emerge at this point, and actually I think in here, and then this rally back into it was rejected and then sharply lower from there. Not unreasonable to expect a test of that major, but this chart would be back in a really strong position either if we can get price back above 125.23 and print some time, or that 4-month actually migrates lower. First indication of weakness on USO, the oil ETF, would be below the 12-month at 12.79. Let's remind ourselves what happened on the dollar index chart. This was the major controlling price, 95.50. This put this price action here put the chart in a really weak position. And then over in here in April, that major actually migrated down from here to 89.54. That coincided with the major migrating on the Euro FX chart, which we'll look at in a second. But as soon as it did this, we saw the dollar index rallying back, and we've hit a new high for this move today. And as I've said in the last couple of videos, it's getting a little overbought on the dailies. We might see a retracement here, but I think that those 2 significant events suggest that this was an important low for the dollar index. Here's that Euro FX chart. The major at 123.30 migrated to that level at this point, and we're seeing a swift decline from there, and we've reached, we've been looking at this level for a while as support, 117.55, which is the 1-year. Price below that level puts it in a really weak position. The next support level is down here at what was the major at 113.29. It currently, as I've just said, is no longer there. Now the story with the British pound chart, rejected test of this previous high at this point, Just had a look above that previous high and then immediately reversed down. You would have expected possibly this level here, 139.65, the 6 months of support. It didn't. Fell straight down to the trend line of 2016 low, this blue line here, and we've broken below that as well, which puts this chart in a really weak position. Okay, that concludes. Once again, I thank you for watching.